Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny and Bert, the Dividend Diplomats. Today we're about to talk to you about one undervalued grocery store stock that may be increasing its dividend in the coming week.
That's right. Smash the subscribe button. Give Bert and I a thumbs up. Dividend investing, dividend growth is back, baby. And like we do, we bring to you the undervalued dividend stocks to the YouTube screen. And what better way to hear it than Bert and Lanny from the Dividend Diplomats, baby.
That is right, Lanny. And guess what, everybody? The stock market is not cooling off. It continues to push higher, higher. They have some flat days, some down days, but then it comes right back, gets up off the mat, comes out swinging because this market continues to push record highs on a regular basis. What's that PE ratio getting to, Lanny, for the S&P 500 right now?
45 times earnings.
Absolute insanity. So yeah, everybody, the market is not cooling off. But is that ever going to stop us, Lanny, from searching for undervalued dividend stocks?
I think you know the answer, Bert.
You're darn right it's not. And that's why today we performed some research, we put some metrics in some spreadsheets, and we are getting pumped to talk to you about this one undervalued dividend stock.
Without further ado, we've been talking a lot about this dividend stock to buy lately. You've been hearing us talk a lot about SpartanNash, SPTN, but guess what? We are not talking about SpartanNash this week. Nope. Instead, we're going to bring in the old Ohio-based company. We're going to bring the old Dividend Growth stock into the ring because they were a little bit upset that we never, we kind of stopped talking about them. The one that Warren Buffett has even poured billions into, right, Bert?
That's absolutely right. Yeah, Buffett's investing. You're investing, Lanny. You bought them a few months ago. Isn't that right?
Yeah, Buffett followed my lead,
Yes.
Yeah,
Bert,
so,
SpartanNash caught the attention. It's like Rocky 3, right? Mr. T, he was there. He fought the fights. He got Rocky's attention. He finally got him in the ring. Clubber Lane versus Rocky. Now Rocky, this company is coming off the sidelines.
You had a stock. They had a stock. And what am I supposed to do, Bert?
You hit them with the left, you hit them with the right, Lanny. This company, Lanny, we're getting ready to talk about them. Cincinnati, Ohio based, as you mentioned, Kroger, ticker symbol KR. Man, oh man, are we pumped to give you a little background about this company, share some facts that are kind of interesting reading their investor relations site, and run them through the famous Dividend Diplomats Dividend Stock Screener, which is, 3 simple metrics, which we have a video above if you want to look more into it. But it's that PE ratio less than the S&P 500, payout ratio less than 60%, although perfect ratio is 40 to 60%, and a history of increasing dividends.
Yeah, I tell you what, couldn't have said it better myself. We're here to talk to you about why this dividend stock looks like it could be a great one to buy right now, could be a great ad to complement your portfolio. And this company, Kroger, could be announcing a dividend increase within the next 10 to 15 days.
That is huge. So guess what? Let's see if it's undervalued. Let's see if it's going to meet the metrics of that portfolio, because we want to know, is it time to buy before that dividend increase is announced? But first, just a little bit of background here about Kroger. I was kind of shocked. I always forget just how large Kroger is. They operate in 35 states, and they have some of the largest brands, largest supermarkets, some department stores, and heck, even some jewelers, which I didn't know about. Their brands include Kroger, Ralph's, Dillon's, Fred Meyer. That was their big department store. I always hear a lot about Harris Teeter from people in the areas where it serves them. And then on top of that, that Fred Meyer's Fine Jewelers. Again, I was shocked to see just how many stores are under their portfolio when taking a look at it.
I'll tell you what, though, they're around everywhere, even when you think they're not, essentially, is what Bert's trying to say. And I know this stock was great during the prices really hung at that under $40 stock price point. Warren Buffett made some nice investments into Kroger, again, ticker symbol KR. And as we're buying and adding shares of SpartanNash, Bert and his wife have been buying them. My wife, we've been adding it to her portfolio. We don't want to forget about the big Ohio grocer giant Kroger.
Yeah, because we both also own Kroger, so we need to see, is it time to add to that portfolio? So with that stock screener where we mentioned the metrics earlier, one of the things we're going to do is we're going to take Kroger and we're going to compare them to some of the other major players in the sector in there. So we're going to take Kroger's metrics, walk through them, but then also compare them to some of their rivals, including Albertsons, ticker symbol ACI, and Spartan Nash, our favorite company we just talked about, ticker symbol SPTN.
No, exactly. And I mean, we're going to get through first the dividend stock metrics for Kroger. We're going to see how they stack up a little bit against these competitors briefly. We're going to talk about if Bert's buying or if I'm going to buy some more shares of Kroger, and ultimately we're here to try to help you find stocks out there to potentially consider buying or adding to your watch list.
Exactly, Lanny. So the prices included in this video are going to be as of 6/8 close, so June 8th close. So just keep that in mind as you're watching and looking at these stock prices. So let's jump right into that first metric. Kroger, their stock price. Let's look at their PE ratio. Shares were 38.89. The forward earnings are 285 based on average analyst estimate. Gives you a PE ratio of 13.6, well below the broader market, as we mentioned earlier, which is at that 45x mark.
Well below the market. Looking at Albertsons and Spartan Nash, Kroger's actually higher than the other two, with Albertson being a new public company pretty much 1 year, at 10.63, and then Spartan Nash is at 11.65. So Kroger slightly higher on the valuation, the price to earnings ratio here.
And that would make sense considering they are one of the major players in the sector. So you could understand why a company like Kroger trades at a premium compared to the other competitors as well. But still, let's all remember perspective, lower than the market. So all three of those companies will end up passing that first metric of our stock screener. Moving into metric number 2 here with that dividend payout ratio, Kroger's annual dividend is 72 cents. Divide that by the forward earnings of 285. That gives you a payout ratio of just 25%, well below that 60% threshold, and absolutely even below our perfect payout ratio range.
Exactly. I mean, they're right there. You have plenty of room to continue not only paying that dividend, but growing that dividend. As we'll see in the dividend growth rate, it'll be a great segue because they have plenty of room to not only increase the dividend, but to jack up the dividend by a double-digit rate. Now, to compare, oh, sorry, Bert, go ahead.
No, I was just going to say exactly. No, after you, Andy.
You're going to say exactly. Now, to look at Albertsons and Spartan's payout ratio, Albertsons, again, is looking pretty good, too. Sounds like a good deal to me. Albertsons is at 20% right now on the payout ratio, and Spartan's in that perfect spot at 45%. But Kroger, 25% is beautiful. Beautiful.
Yeah, beautiful. And again, all three of them doing well, and you'll see why when we talk about the yield later, why it makes sense that Spartan Nash is the highest of the three companies on that list. Moving into the dividend history, let's talk about the dividend history. Kroger, they're not quite a dividend aristocrat, which is a company that has increased its dividend for 25 consecutive years. They've increased their dividend for 14 years. But what's nice about Kroger is that strong dividend growth. They have a 5-year average dividend growth rate of 11.45%.
There it is. Not only did I want you to get to that growth rate history, but that double-digit banger. We'll speak a little bit about the dividend yield. In fact, Bert will speak on the behalf of that against the other two companies here. But that double-digit growth rate percent is key. And doing that over that 5-year, that longer term is clutch. Albertsons, new public company, don't really have data yet on the growth rate. I expect them to grow it just at a similar rate. I haven't looked at what management and the board's expectations are. But obviously, it almost doubles Spartan Nash's growth rate, which is at just around 7%. So can't knock Kroger here with the growth rate.
Yep, exactly. Moving into the dividend yield, though, Kroger's yield is 1.85%, so just barely above the market, so pretty much in line with the broader market. You compare that to Albertsons, right in line, 1.9%. That, to me, that's exactly why Lanny's saying he expects their growth metrics to look just like Kroger's. The two companies' profiles are moving parallel to one another. What's interesting, though, is both of them add them up together, and they're still less than Spartan Nash's 3.88% dividend yield. So as we mentioned earlier, Spartan Nash has the higher payout ratio, but they also make up for, as you can see, with that higher dividend yield. So overall, Kroger is the lowest of the three, but they're at least in line with the market. So you take that with their growth rate, and that's kind of what you want to see there. Lower dividend yield, higher dividend growth rate.
Guys, I mean, Kroger right there, low price to earnings ratio, a very low payout ratio, really setting the stage for that upcoming dividend increase, as well as that long-term high dividend growth rate and a yield that, is 1.85% currently, which is around 40 to 50 basis points higher than the S&P 500 yield currently, which again, Kroger's yield should be getting higher. I'm assuming they're going to clip 2% after this growth coming up.
Love it. Love it.
The one thing to consider is the level of debt on the balance sheets, which I know a lot of people are aware of in the grocery industry. Kind of looking at the debt to equity, ratios. Again, Kroger's looking at a little bit over 1.3, 1.4 times equity right now on the long-term debt. Albertsons is loaded with debt right now at more than 4 times that amount. And then Spartan Nash seems to be a little bit better with their debt to equity ratio right now, below 1 times.
Yeah, it is interesting to see the debt numbers play out. I mean, Kroger with that 1.3 debt to equity, what we're really hoping for is to analyze and make sure that the companies aren't over levered, because when push comes to shove, if stuff hits the fan and the companies get into trouble, the debt holders come first. And that's when you run into so many companies that had high debt over the last year were forced to cut their dividend to cover the interest payments and cover their debt payments as well. So Kroger, we like to see it around 1 or slightly below. 1.3 is not bad, especially compared to Albertsons, which is over 6 times debt to equity. Man, oh man, was there a lot of debt taken out when this company went public last year.
Yeah, that's what happens. You want to get a little taste of the markets. You want to raise some capital, and you want to cash out potentially. Usually it takes some form of, debt as well.
Got to tip your cap to those investment bankers that just made a nice fee off of all those bonds.
That's right. Currently I personally own Kroger and, we own Spartan Nash in our family's portfolio. Kroger, I'm adding to the stock watch list. I can't hate on it. I was buying earlier when it was in the below 35 range, I believe. Obviously they've increased between 10 to 15%. I have to look back at the price point. Spartan Nash, Albertsons, both looking okay. I like Spartan Nash a lot, obviously, right now, but I don't think Kroger's not a bad stock to have on your watch list. I'm not going to buy immediately, but I'm going to keep it on the watch list.
I agree with that conclusion more. What's interesting was I was coming to this seeing how Albertson was going to hold up to Kroger and see if there was maybe a new potential dividend growth stock. But when you run those two metrics next to each other, sure, they're trading at a slight discount to Kroger, but man, that debt number, that is not a great looking number for Albertsons. That's kind of something I want to see hopefully come down. And I want to see that first big dividend increase to see if they are going to match Kroger's double-digit dividend growth.
There you have it, everybody. What are you doing? Are you buying Kroger stock? Do you have them on your watch list? Are you buying more Spartan Nash right now? Do you like the industry? Or are you fearful of the industry in a post-pandemic world? Bert, what about you? Any other questions or comments as well?
No, I mean, let us know just overall. We're interested to see, and let us know what other undervalued dividend stock you want us to do an analysis of. We love seeing your ideas and adding companies to our potential video listing. And don't forget to subscribe and give us that thumbs up if you haven't. We are getting so close to 10,000 subscribers. So thank you, everybody. We really appreciate it.
We need you to subscribe to our channel. We thank you for subscribing to our channel. There you have it. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.